All right, guys, I'm going to do a quick price action review of today, specifically the shorts I took on the ES this morning using the 930 equities open as a volatility driver. So let's start on our weekly chart, actually on a blank chart, to look at kind of the dynamics of price moving into the week. As you can see, this week we traded into our weekly buy side imbalance, sell side inefficiency. This is a bullish PD array, and as you can see, it is overlapped by a bullish order block on both the NASDAQ and on the ES. Okay? So as you can say, or as you can think, I guess, this manipulation target of this weekly imbalance is the draw on liquidity, right, in the opening days of the week as we have seen. If we go down to the lower time frames, we're going to see how Monday consolidated before Tuesday traded into this weekly imbalance. All right. Now that we reached this weekly imbalance, my job was to evaluate the structure moving into today's session to determine if we were going to be looking for longs out of this imbalance or shorts before we, eventually reverse and move higher. So in order to do that, I used the daily candle closures on both the NASDAQ and the ES, in addition to the lower time frame market structure to evaluate whether or not I was going to be trading long or short today. So as you can see on the NASDAQ, on Tuesday, we closed through Monday's low. That gave me a draw on liquidity of the previous day low for this morning session. I'm also going to mark out that same previous day low on the ES, right? Despite the fact that the ES did not close through Monday's low. It in fact wicked it and closed above. So I'm going to get rid of this weekly for value gap so we understand that we're in that point of interest. Now let's go down to the lower time frames, like the 4-hour and 1-hour charts, to observe the structure. So out of this weekly imbalance, you can see that as we approached our morning session, we had yet to form any significant displacement out of the weekly gap higher. Importantly, this lack of displacement and also critically, this lack of SMT at any major swing point, okay? So as you can see, this swing point here was liquidated on both NASDAQ and ES, gave me a bearish bias for the index open simply because we had failed to form a key level SMT followed by a displacement that would confirm that price is reversing out of this weekly inefficiency we had marked out. So I was looking for previous day low as the draw on liquidity, and I was also considering the fact that SMT divergence may form around that previous day low to catalyze a move higher, keying off of that weekly internal range. So let's look at the hourly charts. Moving into the session today, what I saw was pretty simple. If you guys were in my stream this morning, you know I had marked out on the ES and NASDAQ this up close candle, which is an opposing candle of bearish order flow, or this order block. Now, the reason why I had this candle in particular marked out as a high I wanted to see remaining intact, right, the swing high above it before we liquidated previous day low, was simply because this high in here I consider to be an intermediate term high. Why did I consider it to be an intermediate term high? Simply because it rebalanced this 4-hour internal range of liquidity, or CISD, right, sell side imbalance, buy side inefficiency, before proceeding to expand lower. So I wanted to see this high remain intact until this previous day low was met. Moving down to the lower time frames, as we can see on the index open at 9:30 a.m., we had 8:30 or 8:15 news, which more or less consolidated. So I was looking for 9:30 to be that expansion move, and previous day low was my objective. So as you can see at 9:30, right as price moved into the equities open, we formed this key level divergence, right, before the session, where NASDAQ actually came in above these Asian highs. So here we formed an SMT divergence, right? Now this SMT divergence was in a key level I had marked out, this 4-hour, right, opposing candle or order block. So once I saw this key level divergence, I was expecting 9:30 to act as the distribution lower because 8:30 manipulated higher. So the statement became, if 8:30 manipulates higher, 9:30 should Sorry for my spelling. Distribute lower. That became my thesis. Now, in order to align myself with this order flow, I utilized a 5-minute change in the state of delivery, which we can see on the S&P 500 was a closure below these candles right here. And once I had that 5-minute change in the state of delivery, you can also notice that on equities open, we formed another divergence. So that means price made a higher high on the NASDAQ and a lower high on the S&P, okay? So when I saw this divergence form at 9:30, followed by this change in state of delivery at 9:35, I entered short on the ES. If you were in my server, you probably took this trade with me in the morning. I covered the rejection block high, which is the high of the bodies of this SMT candle right here, right? So in here or in here, regardless of what you want to use. Then I targeted 2-to-1R, something like this, right? So this was the original trade idea. From here, targeting 2R. As you can see, I never actually got a 2R fill. Instead, what I noticed was that I have previous day low as my first partial. So I took off some contracts here at around 0.7, 0.8 R, as you notice, right? Still a decent trade, but not the best risk-adjusted trade. However, once we came into previous day low, as you saw, right here. Let me pull this to the left. Once we came into this previous day low and I took my partials off, I noticed that the ES and the NASDAQ formed another divergence, which we were expecting. And that caused me to close the majority of my position as price came back into this order block. So I took off some partials, right? I had 10 contracts. I took off about 7 here. And then 3 of my contracts, I was stopped out at in a small profit. So that was the trade thesis for today. It was pretty simple. We were framing this 4-hour into 5-minute realignment, looking for previous day low, utilizing our candle closure method on the daily chart, and we managed to secure around 1R. Obviously, as price displaced here, right, I trailed my stop loss to this candle body high, and then the trade became more of a 2-to-1R trade. However, at first, when I first entered, I was covering all the way at this high, and it was only once I saw this expansion lower that I then reduced my risk. In fact, I actually break even to my stop and took my runners off right as this candle came in at around 10 or 11 points. I'll post my execution so you can see them with the video. But yes, the trade in all, eventually went our way. Unfortunately, right, we didn't go much lower, which I wanted to see into this hourly devil's mark, which was my next draw on liquidity down here. This is where I wanted to see price react off of. In fact, instead keyed off this order block in here and then reversed. And now my thesis moving forward is to target the other end of the range, as we saw with the NASDAQ taking out these highs, and the ES may come in and take out these highs as well. This SMT at the previous day low could now be, right, the structure we need to see higher prices out of this weekly internal range. So that's a quick trade breakdown, how I actually interpreted price this morning, how I entered and positioned myself in ES for the shorts, and then where I took partials and then eventually got stopped out at break even. So hope that makes sense. Let me know if you have any questions about that. I'll do more of these trade breakdowns if you guys want them. I think it's nice so you can see what I'm thinking and then actually put some logic to my executions. Okay, take it easy, guys. See you tomorrow. Peace.